Everyone, welcome back to Upside Down Data. Today I want to talk about the current state of the market and whether or not I think this rally is likely to continue or if we need another pullback before continuation is plausible. So I'm going to start us off on our website, polaritydigital.io. Link is in the description. This is our website that we launched in collaboration with Jay over at Daily Crypto Analysis. And we're going to start on the dashboard, which gives a lot of useful data from our models, basically the real-time output of our different models. The first thing I wanted to talk about is basically the trend. So if we look at Bitcoin right now, we can see that really since the beginning of 2023, obviously Bitcoin has been more or less in a ripping uptrend with just one big kind of deeper correction here in mid-March before we really bounce back in a major way. But now that we're up at around 27, 28K level, it seems like we've hit some resistance at this kind of technical resistance level over here. And the question I think a lot of people are asking is, can we just continue ripping off to the upside, or might we need to come down and correct a bit? And so I want to talk first about our two different trend models, the trend confidence indicator and the market direction classifier over here. So the trend confidence indicator is a trend model, but it's really trying to be as leading of an indicator as it can be. Basically, it's telling you how confident should we currently be in some kind of trend that we're in. So Bitcoin is currently in an uptrend. Should we think that that's likely to continue or not? And so what's interesting about the TCI is if you look at Bitcoin, it is positive, right? It's in the positive direction, which means that this does indeed look like an uptrend from the TCI's perspective. But it's useful to zoom out and look at where things stand relative to all these other assets that we're monitoring. Really only XRP, which has been rallying based on rumors that Ripple might get a favorable outcome in their case against the SEC. Really, other than XRP, which has been an outlier, every single other asset, Ethereum included, is in the negatives, which basically means that with the trend that these assets were in, a lot of them being uptrends, if we look at Ethereum, it's been in an uptrend since the beginning of the year, but the TCI is skeptical. The TCI is not especially confident in that uptrend continuing right now. Same for BNB, same for ADA, et cetera, et cetera, et cetera. That basically there's this local uptrend that we've been in, but it looks like it might be weakening as per the trend confidence indicator. The trend confidence indicator thinks that these are not as believable as they maybe were at the beginning of the year, that initial phase of the uptrend. And that can be concerning because that can be a leading indicator of trouble to come. So for example, if we go over here and just look at the history of the TCI, we're going to look at Bitcoin here zoomed in since around November of 2020. What you'll notice is with the TCI, as it goes into these higher lows, and when it starts setting in higher lows, lower and lower and lower, that tends to be a bearish sign. So even here, it was technically putting in lower highs throughout this kind of local uptrend. Generally speaking, when you see that kind of behavior on the TCI, that can lead to big corrections. Lower highs, big fall off. Lower highs, big fall off. And what we're doing here is the same thing. We've been in this local uptrend ever since the beginning of the year. You'll notice that Bitcoin's TCI is going down. It's setting in a lower high here by the looks of it. And so that would be concerning. If this gets kind of confirmed, if this is definitely a lower high here, that means that likely we're going to see some pullback before continuation to the upside is plausible. Now, that doesn't have to happen, right? If we break out to the upside here, this could rip up to the upside and we not put in a lower high. But right now, it's looking an awful lot like we're setting up for that kind of a thing. And so what I'm looking at with the TCI right now is signs that the market is weakening, that this uptrend is weakening. And so it's doing that for Bitcoin, even though Bitcoin is technically in the positives here, so more in the uptrend than downtrend category. But when we just look at the rest of the market, it is bleak. It is bleak from the TCI's perspective. We see that for Ethereum, just getting weaker, but especially for altcoins like Solana, which haven't even been able to put in a new high relative to what they did, coming into the beginning of the year. That is a concerning sign in my opinion. Now, the countervailing point that you could say from a trend perspective, and again, TCI is trying to be a leading indicator, gives you advanced warning of when things are weakening. So you'll notice that our market direction classifier, our other trend model, is still bullish across the board. So the way that this model works is it sets a critical level that it's looking for price to be above that level, and if it is, it's bullish. Falling below that level is bearish. And generally speaking, it's bullish across the board with just a few exceptions. There are about 4 different assets here that the price is below the critical level. But generally speaking, relatively bullish. And so what that's telling me is that the MDC is not ready to call it quits yet. And so basically, even though there's some weakening that's showing up in the TCI kind of perspective, it doesn't see enough evidence yet to be getting bearish. It still thinks it's still gonna give these assets some leeway before it gets bearish on them. But don't be surprised if we see a local pullback. And also, the TCI getting concerned here doesn't mean that we're going to go into some mega correction, but it might just be signaling some kind of a pullback. And so what's very plausible to me is that Bitcoin experiences a pullback in the near future, but stays above its MDC critical level, and then returns back to the upside, making it so that this bullish bias ends up being correct, but that this weakness that the TCI is signaling might play out, not just for Bitcoin, but maybe for some other assets as well. And so if we're going to play out a possible scenario that this could look like, I want to look at the 200-week, that's the 200-day, the 200-week moving average for Bitcoin. Because I think this is actually a reasonable target that we could look for a pullback. And notably, that is currently, the 200-week moving average is at about 25K, still well above the MDC's critical level, which is down at, let's see, currently 22.8K. So pullback to there would still be in the bullish range for the MDC, but again, that might be that weakness that the TCI is signaling. This weakness suggesting a pullback might be coming. Maybe that pullback could bring us back down to roughly this level. And at that level, there would be a lot of technical support. There'd be this technical support just in terms of support that used to be resistance back over here through this whole range here. But then also this key moving average, a 200-week moving average, which, in the past often has acted support during kind of major low points in the market, acted as resistance as we came up to it here. We got rejected off it, but now we broke above. And if we can come down and retest it as support, I actually think that would be a bullish development. Not in the short term. In the short term, it'd be bearish. And you better believe if we saw that happening, a lot of people would flip mega bearish, and a lot of people would be calling for new lows. Not to say that can't happen, but I think that a reasonable place to plot a bullish path forward is not just straight up, especially given how rapid this move was to the upside to begin with. But instead, you might kind of expect price to kind of meander its way. Whoops, well, not quite like that, but you get what I'm saying. Meander its way back down to this general target, and then at some point, it'll go off and rip back to maybe be able to move back to the upside. I think that would be a bullish scenario that could include some short-term bearishness that would be consistent with the weakness that we're seeing on indicators like the trend confidence indicator. So obviously that's just speculation. None of what I'm saying here is financial advice. You should interpret the data as you see best fit and what you think makes sense. When I just look at it though, I think that's a scenario that seems plausible. Now the other obvious caveat here is that if we see the stock market meltdown, if, for example, the banking crisis gets exponentially worse and it's not able to be contained, I think in some ways all bets are off, and who knows how Bitcoin would react to that kind of scenario. But assuming none of that stuff kind of happens, to the degree that as bad as that's going to get has already been priced in the market, I still think that a reasonable place that we might think things could go would be kind of down, retest the 200-week moving average, and then maybe be able to move back up from there. Doesn't have to happen. We could just continue to rip to the upside. There is precedent for that kind of price action. We go back to 2019, which is where a lot of people have been comparing this rally to. You'll see examples back in 2019 where, you catch, some resistance at some local point, and then you continue moving to the upside. You move up, kind of have to consolidate for a few days underneath some kind of resistance, then push back to the upside. So it's not impossible for sure that we'd see something like that. Just when I'm kind of thinking about how rapid this move has been, I suspect that there are a decent number of people who might be taking profits at this point, and so some kind of a pullback might be reasonable. Let things kind of reset, let the shorts pile in, thinking that price is going to go a lot lower, and then that's maybe when you can see a new kind of resumed move to the upside. When a lot of shorts get squeezed, they have to cover, you can really move price to the upside in a rapid way. So time will tell, obviously, but that's one of the things I'm looking for. And again, this is kind of the short-term outlook for Bitcoin. And so another thing I did just want to mention is if we look at the short-term UDPI for Bitcoin, so this is our risk model, basically higher levels, higher risk, lower levels, lower risk. If we just zoom in on recent price action, what we can see is that, we found a local resistance on the short-term UDPI up at around 1, in this first move up in this rally. And you can see that the short-term UDPI is moving up again pretty rapidly. Again, we're just below 0 right now. It would not surprise me if the short-term risk has to cool off a bit, maybe find support back down at this lower level at around -3 like we did back here in the past before we can then start setting a course back to the upside once again. So just another thing in the short term to talk about. But as I was saying, this is all short term considerations. And one thing I did just want to point to, so this is actually a tweet I put out a little while ago, but I think it's a point that bears mentioning, that there's some signs of long-term bullishness re-entering the space. This is a chart of our momentum bias indicator, MBI. And what I was mentioning in this tweet is that what you tend to see in this transition out of bearish phases into bullish phases is this kind of accumulation kind of behavior where the MBI, this our momentum indicator, would kind of oscillate around zero. You'll see that here, you see that here, kind of oscillating around zero, and then you really build into this point where you're kind of spending a lot more time up in the positive momentum range relative and versus the negative. And what we're seeing right now is that same kind of thing. We're kind of oscillating around zero. You know, the MBI popped back up above zero with that rally that we saw, and now, you know, we might go back down to the bottom. And that's totally expected, and that's not something to be especially worried about, in my opinion. In fact, that might just be more and more evidence that Bitcoin is building into some kind of bottom formation that could then eventually break into a new bull run. Now again, obvious caveats still had to be made there that this assumes no big meltdown in broader macro markets that could basically, you know, derail any of this depending how Bitcoin reacts to those kinds of market conditions. But barring kind of extreme circumstances like that, I think Bitcoin's showing the similar kind of behavior that we've seen in the past that's generally been more conducive to a long-term bullish outlook than a long-term bearish outlook. So in some ways, what happens in the short term here, you know, whether or not we pull back to the 200-week moving average or if we just continue moving up, in some ways is largely irrelevant if we're ultimately building into something that might look like another bigger bull run, which is really where you know, the main meat is made, you know, where the main moves happen, where the main money is made in any kind of bull market. You know, no matter what happens back here, it could be that in several years, you look back at this and say, oh, what a generally good time to be acquiring Bitcoin. You might not really care all that much what happened. So again, none of this is financial advice, a lot of speculation here. You know, you should read the data for yourself. But just when I look across the data that we're getting right now, I see evidence for short-term caution, but long-term optimism. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about indicators and more over there. And check out polaritydigital.io to see the data for yourselves.